YouTube, what's going on? It's your boy Drew back with another video. Today we're gonna update you guys on the trades from this past week. First week of March, we had a really good start. 150% of our trades. We won two, we lost two, we broke even on one trade. As you can see, we got into NZDJPY on Monday morning. Tuesday morning, we got an NZDUSD. We got lost that trade. Wednesday morning, got our first win of the month. GBP, what is that? AUD, GBPAUD, Wednesday morning. Thursday morning, gone to AUDNZD, won that, and then we lost GBPJPY on Friday. So started my account at $10,000 for the month, currently at $12,000, $2,000 profit, 150% of our trades. We're going to break all these trades down, show you exactly what it was that I was looking at when I sent all these out. Show you guys exactly, why we profited the way that we did, why, we got the result that we had. So this was that GBPJPY that I sent out on Friday morning. As you can see, we had lost that trade. I'm gonna break that down. This was AUDNZD. We had sent this out Thursday morning at 12. This is where market's at. We'll break this down, show you exactly why we had profited on that. Then we profited on GBPAUD as well. This is where market was at during that time. Sent this out at about 11:40 p.m. Market came all the way down, hit our take profit, hit a nice 1-to-2 ratio off that. NZDUSD, this is the trade that we had lost. So we'll break this down, show you exactly why the market was doing what it's doing, and then our break-even trade, I'll break that down as well. So a lot of trades to go over, a lot of knowledge, a lot of new knowledge that you guys are going to be getting to implement to your own trading, help you get better at this skill set, help you continuously start seeing more profitability within this market. So let's go to the market. Let's start out with we'll start out with the wins, and then I'll go over the losses just so we can learn from the losses, understand why they did what they did. So let's start out with AUDNZD. This was our first win of the week of the month. We'll break this down, show you exactly what it was that I was looking at when I sent this out. Go to AUDNZD. So daylight savings started, ended or started, whatever. I don't be keeping up with it, but I know that the market is now. So I live in Arizona, so we were in Mountain Standard. So the market opened at 3 p.m. Now it's opening at 2 p.m. So everything's pushed back or pushed for. I don't know, but you get the picture. The market is back an hour or whatever. Where's the? There we go. So AUDNZD. Let's go to that. Break this down. I think it's right here. Yep. AUDNZD. So this was on. Let me go back. This was on Thursday morning, 3/6 at 12 a.m. So let me show you exactly what we were looking at. Here, I believe. Yeah, so about this picture right here. So, boom. First thing that I noticed when we got into this trade, let me move myself, right? Remember, whenever we're going into the market, right? What we need to do is, what y'all need to do is, what y'all need to, train your mind to do is, remember, just look at the market as a series of higher highs and higher lows and higher highs and higher lows, okay? Remember, the market, whenever market wants to go a certain direction, it's going to trend. If the market wants to come down, it's going to trend down. If it wants to go up, it's going to trend up. So identify that trend early on. Now, the first thing that I'm looking at, when I'm going on a trade is I want to see a break of structure. Okay, remember what I mean by that? Break of structure meaning if I see a low, if I'm seeing the market's coming down, I see if a low has gotten taken out and I'm seeing market retrace, that's an indication that this may want to continue going to the downside. So you see how market took out this low, you see how market retraced up, and you see how market's getting ready to make that next move to the downside. That is my sign. That is an opportunity for me to potentially get into this trade because we understand how the way the market moves and flows, right? Market wants to keep coming down. Remember, it's going to trend down. And also remember too, our key, one of our key nuggets is the market's going to be moving and it's similar to equal swing. So if I see that market just made this move and I see it's getting ready to make that next move, we know that market's going to potentially make something similar to that last move that it made before, right? So this was the first thing that I noticed. I see that, hey, okay, we have all this room to come to the downside, right? I could potentially get my 1-to-2 ratio out of this trade right here, just based off my knowledge with the market and understanding where this could potentially go to. So now we need to see where this is at from an overall perspective, right? See what market is doing from an overall perspective, so that way we know exactly what we're looking for within our 4-hour time frame, right? So the first thing I noticed from a monthly perspective on AUDNZD is that overall we're on an upward trend, right? We see that market made that push to the upside. We see market retrace, market made the next push up. We see market retrace, and we literally see market getting ready to make that next push to the upside. If market made this move, we understand that 9 times out of 10, market's going to make that same similar swing again, right? We can theoretically map this out, understand where the overall move for AUDNZD where it wants to go overall. Okay, but understand, remember, we're not trading off the monthly time frame or the weekly time frame or any of these higher time frames. We're just getting an understanding of what the overall move is doing, so that way we know exactly what we're looking for on these small time frames. Just because the overall move is going up right now doesn't mean that the move right now today wants to go up, right? So we understand that we theoretically have this much more room to play with, which means that if market didn't make the monthly move, that's going to be a trend within the weekly. So let's go to that weekly time frame. Let's identify that weekly trend, right? Weekly trend right here. Remember, if we can't see what's going on here, this is like a perfect example because it's kind of choppy. The mark's kind of like choppy in this area. We can see, okay, let's go in the past. Identify what made this move so that way we can just follow this. Because also, too, remember, when we go to that monthly time frame, right? If this move actually does want to start going to the downside, like right now, we see that this is on an upward trend. But if market wants to tell us that, hey, this actually wants to start making that push to the downside, what market will do is market will stop on a dime in this area, and then it will start making that push to the downside. How will we know that? By the weekly time frame, the weekly trend. If this move wants to keep going up, that weekly trend is going to keep on being respected. If we start seeing a break of structure within the weekly time frame before this high gets taken out, that's telling us that this wants to go to the downside. Okay, so keep that in mind. So when we go to this weekly time frame, identify the trend. If we can't see it, go in the past. Figure out what made these moves, and then follow it. All right, we can start right here. We see market made that push up, came down, made that next push up, came down, made that next push up, came down, make the next push up, came down, came up, came down, came up, came down, came up. Market made a big push to the downside. We see market came all the way up. We see market made that next push down. We see market finally took out this high right here. We see market made that next push down. We see market took out its high right here. We see market made that next push down. And the main thing that we notice right here, see that market failed to make a new high. Okay. Market came all the way up. We see that market failed to make a new high. We're seeing a complete break of structure within this area. So now what is this telling me? Okay. So remember I was saying earlier about how do we know if market wants to actually start going to the downside from a monthly perspective? Well, look right here. We're seeing a break of structure. We see that market failed to make a new high. If market fails to make a new high, that's an indication that market is getting ready to make a new low. So just understanding our knowledge of the market, right? Let's draw this up. I'm just going to start from this trend right here. Okay. Market made that push up, came down, came up. Market failed to make a new high, and we see market's getting ready to make a new low, right? So if market's going to get ready to make a new low, which is what it's about to do, is about to take out this low right here. That's telling us that from a monthly perspective, market does not want to keep going up from that monthly perspective. What it's now telling us is, hey, this is how high market wants to go to. So now that we understand that this is kind of come to the downside overall, now market's going to make this similar to equal swing right here. Right now, market's going to make this similar to equal swing right here to the downside, which is now going to be a downward trend within the weekly. Okay. So now we understand that, hey, we know that market's going to get ready to take out this low right here. Right. We know that market's going to get ready to take out that weekly low because we're now on getting ready to be on a downward trend within the weekly. In order for that to happen, That's now going to be a downward trend from the daily. So we go to that daily time frame. We can identify the trend, right? Remember, if we can't see what's going on here, go in the past. Identify what made this move its move. Okay, we see the market made that big push up. Identify that trend. We can see it right here. See that this was the start of the move. Market made that push to the upside. Market started to retrace. Market made the next push up. Market started to retrace. Market made that next push up. We see market take out that low. We see market retrace up. And now we see market getting ready to make that next push to the downside. How do we know how low it's going to go to? The market's going to be moving in a similar to equal swing, so similar to equal movement, right? So if we just did this, hold on, let me get to it. Okay, so if we just did this move, if market just made this push to the downside, retraced up, and is getting ready to make that next push down, we know that market is going to at least make this movement to the downside again. At least, or something similar, or something more, right? Like I said, we're just mapping out, we're just getting an idea of how much lower this could possibly go to based off our knowledge with the market, right? So we understand that market's going to take out this low. In order for this low to get taken out, market is going to trend all the way down until it takes out this low. So right now, where we're at within this market, we theoretically have all this room to play with, right? We have all this room to play with potentially before market wants to start retracing back up again from that daily perspective. So now when we go to that 4-hour time frame, the time frame that we trade off of, now when we look at this, okay, remember when we looked at this from the start, we saw that, hey, I could, I'm potentially seeing a downward push. I'm potentially seeing a downward trend that I could potentially trade off. Now, when we look at this from the top and we actually go all the way down to the smaller time frame, we see that, hey, what we were looking at is actually going with the overall trend, right? Is going with, with the move that's going on for this week. Okay, so we can see that trend. We see market took out its low from that 4-hour. We see market retrace from that 4-hour. So now same thing, boom. Up, up, down, down, down. Okay. Now, so now we know that market's going to be making the similar equal swing. Now, before we do that, how do we know that this is our opportunity to trade? Okay, we're looking for a break of structure within that 4-hour candlestick. So let me go to the exact. Let me go to the exact. So this was at about. So this must be the 11-hour candle. So this is where market was at. So we had got in. Okay, so the entry price was 1.10531. So let's just get exactly where we were at. 1.10531. Okay, so just want to show you what market was looking like exactly when I sent this out. So this candle that's 10, 11, 12. So the next candlestick is what we were looking at. Okay, so this is where market was at during that time. We set this out at about 11:45 or whatever. So this is where market was at. The confirmation that we needed, the confirmation that we got, is we saw that market took out that 4-hour candle. Okay, I'm not sure if it was this one or this one. I think it was this one that market that took out that 4-hour candle, and this is where market was at during that time. So now that we got our confirmation, right? Now we're basing our entry, our stop loss on that based off of the 4-hour candle. Now the market took out that 4-hour candle. This is our entry. This is our stop loss. Okay. So now we understand how low this could potentially go to just by understanding how the way the market moves and flows. Now we know the market is going to at least make something similar to that last movement that it did before. Okay. We know the market is going to at least, the market is going to at least make that similar swing. All right. So now what do? We just get our 1-to-2 ratio out of this. What's wrong one? Just get our 1-to-2 ratio out of this. Boom. Okay, so we just need market to come all the way down to about right here. So what was our take profit that we had? Take profit 1.10230. 1.10. Let's just get it on it. Yeah, literally about right here. So 1.10230. Boom. So this is our take profit. Like I said, this is our 1-to-2 ratio. So for me personally, with my account, I'm risking $1,000 to make $2,000 on this trade. So as we can see, market came all the way. We're in the trade. We let market do its thing. Out and yeah, and AUDNZD moves mad slow. So we had got into this at 11:40 p.m. on what is it, Wednesday night. We didn't take profit until about 8 p.m. the next day, I believe. So let me see when to take profit. Yeah, AUDNZD is one of the more slower pairs within the market. But just let the market do its thing. Let it play out. As low. Up. What time does it take profit? Boom. So let's say take profit. It was like 7, 8 p.m., something like that. What is that? Yeah, I think this is 8 p.m. Yeah, 20, 21, 20, 8 p.m. So yeah, this was AUDNZD. This is the trade that we had sent out. This is the trade we got into that Thursday morning. So we profited on that. So let's go over that GBPAUD. All right, let's just go over the winning trades first, and then we'll go over what I was looking at on the losses. I can't see this. GBPAUD. Boom, boom, boom. Cool. So that was that AUDNZD trade. Let's go to that GBPAUD trade. So this was 3-5. So Wednesday morning, 3-5. Let's go to the exact trade. 3-4. 11:40 p.m. Well, let's just go straight to it. 3-4. Right here. Just for the sake of me trying to get through every single trade, I'm not gonna try and like mark everything up perfectly. Kind of just want to show you was so. Let me erase this. Let's get to right here. Okay, so the first thing that I was looking at, all right, the first thing I noticed, okay, remember, we're going on the market. I'm looking at it like this, right? This is what I'm seeing. I'm seeing the upward trend, seeing market doing this, right? First thing I notice is I see a break of structure, market retracing. And not only that, I'm looking at this real time, I see that market I already took out that 4-hour candle. So I'm seeing that market is getting ready to make this move to the downside right here. So that was the first thing I noticed. So let me draw that out for you. Okay. We see market made that push up. We see market made the next push up. We see market take out as low. We see market retrace. We see the market's getting ready to make another push to the downside. Okay. So let's mark this up. Let's see what's going on here. Because for all we know, this could just be market retracing just a little bit to continue going to the upside, or this could be telling us that hey, market wants to make a big drop to the downside. We'll start on that monthly time frame, right? First thing that we notice that overall GPAUD is on an upward trend, right? Obviously, see that market made that push to the upside. Boom, took out its high. Market retraced, right? We see the market's getting ready to make that next push up. Right, we know the market's going to move in a similar to equal swing. So if market made that movement, then 9 times out of 10, market's going to make that same movement again. Right. So we know the market's going to make that same movement again. So obviously, if that move is going to happen, that's going to be a trend within the weekly. Can't see what's going on here, going to past, right? What made this move is move. You see the market made its upward trend. We see market started to retrace. We see market made the next push up, took out its high, higher low, higher high, higher low. So now we know the market's going to make something similar to that swing that it made right here. Trace. Market's going to make that similar to equal swing right here. Okay. So boom. We still have all this unit to play with. So obviously that weekly push to the upside is going to be an upward trend within the daily. We can see that daily trend. So this is what we're looking at. Okay, so let's just go in the past. Let's identify the trend here. Okay, see that market took out that high, giving us that indication that market's getting ready to go back up. Okay, so now look right here, right? We obviously see that the overall move with GBPAUD is on an upward trend, okay? But this is what I mean by just because the overall move is going up doesn't mean that right now, today, it wants to, keep going up, okay? Because remember, within every trend, there's a trend. So look right here, okay? We see that obviously market made a big push upside, right? Remember, the market's going to be moving in a similar to equal swing. If this weekly move wants to be made, market's not just going to keep going up, up forever. It's going to trend up. Market's going to make a series of higher highs, higher lows, higher highs, higher lows, higher highs, right? So how do we know when market wants to start making that push to the downside? Well, with our understanding of the market and our knowledge of the market's going to be moving in a similar to equal or greater swing. So given the fact that market made that equal swing and made an even greater swing, we are expecting this to start retracing from that daily perspective at some point, right? Which means that would be a downward trend from the 4-hour perspective, okay? So how do we know when this wants to start retracing? Once we start seeing that break of structure within the 4-hour perspective. Because remember, this whole move to the upside from a daily is an upward trend from the 4-hour. So if we start seeing that break of structure, let's draw this out. If we start seeing that break of structure within the 4-hour, then that is telling us that market wants to start to retrace. Remember, this move up is a upward trend. Okay. This move down is a downward trend. Okay. Now, how low is this going to go to? Well, we know that the market likes to, move based off the EMAs, right? So we're expecting this to potentially at least just come down into here, right? Before this move wants to start making that push to the upside. So we understand that we theoretically have all this room to play with to come down before this wants to start coming up. And obviously, market coming from here all the way down to here, that's a lot of movement. That's that is a lot of potential to make money within the market just by market making this small move to the upside. That's all we need, right? Remember, we're just getting our understanding of where this wants to go to. So now that we have that understanding, we know that market could potentially come all the way down into here before it wants to start making that push to the upside. So when we go back to the 4-hour time frame, right? When we go back to that 4-hour time frame, and now remember what we were seeing when we first got on the 4-hour time frame, we saw this as a potential sell. Now, when we actually mark this up and have an understanding of what GBPAUD wants to do right now today, we see that hey, this is actually going with everything that we need within within to trade, like to get this for a trade. So let's mark this up, show you exactly. Remember, if we can't identify here, just go in the past. See the movement. What made this move its move? Identify the trend. Now we see that trend right here. Boom, boom, boom. We see market took out this high. From this point to this point, this is the lowest point market I got to before market wanted to go up and take out this high again. See market came up, came down, came up, started to get a much smaller trend going on over here. You see market came up, market came down, we see market came up, we see market finally took out this low. So now that market took out this low, we know exactly how low this could potentially go to. You know that market's gonna at least come down into this range. Now we're just finding our opportunity to trade. And honestly, like we already have our opportunity to trade. Because like I said, when I opened this up, market already gave us our confirmation. Market already took out that low. So now that market took out its low, let me draw this out visually. Boom, market came down, came back up, came down, up, up. Okay. Boom, market took out its low. Got its low. And now let's get our exact entry. So I think market was like a little bit higher up into here. Let's get our exact entry. So when I had sent this out, market was at 2.0444. Get exactly that 2.0444. 2.044. So okay. So that's where market was at. Obviously, our stop loss is right above that 4-hour candlestick. Very, very clean trade. This is very clean textbook trade, right? Almost looks exactly like our, our drawing that we like to draw. Boom, 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 boom. They got a low, trace up, keep coming down. Perfect, right? So we see that the mark came up. Okay. We know the mark's going to move in a similar to equal swing. So we know the mark's going to at least make something similar to this or greater. Obviously, we have all this room to play with. So, this is kind of one of those trades where it's like, okay, even though Mark didn't make the similar swing, even if it makes it like let's say like this wasn't a 1-to-2 ratio, because I think this was like perfectly exactly a 1-to-2 ratio, but like let's say our 1-to-2 ratio is like more so down here than that equal swing. This would be like a trade that I would like potentially stay in a little bit longer, because we have all this room to play. We know the market's going to come down to here. So, even if it makes this swing, I'll hold on to it until market makes that, 1-to-2 ratio out of this movement. Okay. So with this trade, this is where we entered. This was our stop loss. The stop loss was at 2.04825, 2.048, 2.04825. Okay, it was like up into here, somewhere. Let's put it right there. 825. Okay. 825, and then our take profit was at 2.03, 2.034, 03438. 2.034. Get it right on hard. Boom. Basically. Okay, so as you can see, we're risking this to make all this. 1-to-2 ratio, short position. That's more than 1-to-2. Okay, I mean, obviously this was our take profit, but I don't think this entry was right. All right, it's either the stop loss. I don't think we entered this a bit lower, somewhere inside this range. Okay, no, this is what it was. So the spread. So this is where market was at, but the spread adds on like a 1-to-2 pips. We had to take profit down here because it made it something like that. We got in around this area. Stop loss was over here or whatever. We played out. All right, market gave us a nice. We see market hit our take profit. So yeah, So we see market hit our take profit. We can see market still trending to the downside, things of that nature. But yeah, this was the GPAUD trade that we had sent that Wednesday morning. So this was GPAUD. We profit on GPAUD. We profit on AUDNZD, right? So for me personally, risking 1,000 to make 2,000. So with them two trades alone, that's $4,000 profit. Okay. Now we had our two losses. Okay, so let's go over that. Let's start out with NZDUSD. Right, NZDUSD. Let's look at this. Let's see what we were looking at with this during that time. NZDUSD. That was Tuesday morning, 3-4. Morning. This was at 7 a.m. So I don't think I didn't find anything during that London start. Yeah. So we found this at 7 a.m. 3, 4, 7 out. On that. Okay, this was right here. I think we were trying to buy this, I'm assuming. Or we at 0.56328. That's 7. 0.56. Zero point 0.56328. Okay. This is where we're at when we bought it. And then stop loss 0.5602. 0.56. I'm assuming it was right here. Get that exact. Okay. So boom, that's all we really need right now. So obviously, first thing I noticed with NZDUSD is we see that was on an upward trend, right? So obviously, I think we were trying to continue to buy this up. First thing that I noticed is I see a break of structure. We see the market made that push up. We see market came down. We see the market is getting ready to make that next push to the upside. Okay. So that was like the first thing that I really, really noticed. And then obviously we go back to that monthly time frame. We got to get an overall picture of what this wants to do. You can see that overall we're on a downward trend, but we can clearly see that right now market is retracing, up from that monthly time frame, which obviously means an upward trend that's going on within those smaller time frames. So we can see that right here. See market made that push down. Made that push down. We see market retracing up. Okay. So obviously we know that this EMA needs to be filled. So we know that this is going to keep going to the upside until all this is filled. So obviously while that's happening, that's going to be an upward trend within the weekly time frame. Okay. So we can see the trend right here. Right. That monthly move down is a downward trend within the weekly. See that right here. Up, down, up. Because this is low. Down, took out its high, market trace. So now that we see that we're getting ready to make that push to the upside. Okay, let's draw this out just so you guys can see what I'm looking at. If I'm not mistaken, I don't think this trade was necessarily wrong. I think we were just expecting it to, I think it made its similar swing already. and we were expecting it to go higher, and it just didn't give us, more of a push that we wanted. Boom, see that high get taken out. Now we know the market is going to get ready to keep going to the upside all the way up into here. That's going to be a trend within the daily. You can see what's going on. So let's on the past. What made this move? Figure it out. You see, market came down, up, down. Market got its high. Market retraced. Market came back up. Market retraced. Market came back up. Market completely took out this low. You see, market is getting ready to make that push to the upside. Okay, so right. So what this could potentially do is this could potentially come up in here. So this move didn't happen yet. So I don't think this move happened yet. I think when we were looking at this, market was still like somewhat down here. But while I'm looking at this, I'm expecting this to at least come up into here, because what this could potentially do is market's probably not going to come all the way up and take out this high. What it's probably going to do is it's probably going to come up right here, probably stop on a dime right here, fail to make a new low, and then start making that, the upside and start retracing, or not retracing, but start making that, push the upside from that weekly. Okay. So where we're currently at, we see that market is, retracing from that weekly spike, regardless of, what the potential move can be. We know that right now, market is retracing from that weekly, and we know the market is going to at least come up into here. Okay. So that's all we need. That's all we need to know for right now. Right. So when we go to that 4 hour, and we know that market's going to at least come up into there. So when we were looking at this, so now we can see that, hey, what we're looking at is actually going with the overall movement, right? We can see this is the start. Market came down, came back up, came down, came back up, came down, came back up. It came down, came up, came down, up, down. Okay. So then this is what we were looking at, right? So let's zigzag this up and show. Yeah, I think this was one of those trades where it kind of already made its similar swing. So there's no really telling how much higher it can go to. We understand that it can make a higher push up, but remember, once market makes a similar to equal swing, that's kind of market telling us that, hey, like this could potentially be getting ready to start retracing. So as you can see right here, um, we see that we see that market made like that exact movement that it did before, right? We see that market made that exact same movement. Where we had entered was at that 0.56. So you see how market had already made that similar swing. And so this was one of those trades where it's like, okay, we have all this room to play with still. Um, you know, Obviously not every single time is market gonna make that exact movement and then stop. Like right here, see how market made that push up, retrace, and it made an even greater movement. We were kind of anticipating that to happen again, just because, first and foremost, it's during the New York session, so this is, one of the most volatile sessions in the market. So I'm expecting just continue. I was expecting this to continuously keep going to the upside. Yeah, like where it's at right now. So like we had entered at 0.56328, 0.56328, 0.56328 here. And then obviously our stop loss was probably a candle. Not probably, it was that candle below the candle. Right. So like I said, we know that market could potentially come up into here. We're getting that 1-to-2 ratio out of this. So, like with this with this trade, it was kind of just like, okay, Yeah, I mean, this wasn't really like the smartest trade to get into, but like I said, with it being New York session and this being a USD pair especially, I was kind of expecting market to like give us some like a greater push, up. Um, but obviously, just based off how we trade and based off the basic technicals of how we trade, market did make it similar to equal swing. So obviously, once market makes that similar to equal swing, we're not necessarily expecting this to keep going to the upside. We play this out, we can see that market started to retrace. Um, Hold on, now I'm confused a little bit because this played out exactly how we wanted to. What? Oh, wait. What was our stop loss? Our stop loss was okay. Yeah, I think 0.56204. 0.562. Okay. Oh, yeah. We shoot. I mean, to be honest, it actually played out exactly how we're supposed to do it. But I don't think so. I think when I was looking at this, okay, when I was looking at this, I think this next candlestick was about to open. So I think so. The next candlestick opens up at 7. Okay, so yeah, Mark. This is where Mark is at. So we were looking at this candlestick. Okay, we were looking at this candlestick. The market's open because this next candlestick opened at 7 because we got into the trade at about 7 a.m. So when we were looking at this, I was expecting this to continue making that push to the upside. So we were basing this trade off of that last 4 hour candlestick. Okay. So this is where we had our stop loss. Now, if we were looking at this earlier, right? If I had gotten this before that 7 a.m. candlestick, I would have been looking at it like this, like boom market take out that high. And then I would have been looking at that last candlestick market made and would have tried to let this play out to the upside. I mean, and the trade, like I was saying, like, the trade ended up playing out the way that we wanted to. I think just our execution wasn't we didn't execute it the right way that we were supposed to. Because this actually plays out exactly how we want. Like, yeah, we knew that market's gonna come into this area. We knew that market is gonna fill out this area first. So it would have been a great trade had we had looked at this earlier. Because like I said, I was basing this trade off of this candlestick. We had our stop loss right here. We had our entry at that. We had our entry like right at that over here at that 4 hour candle. This is our stop loss, this is our entry, and then we were trying to ride this thing up into here, get that 1-to-2 ratio. But obviously, like even me looking back at it, even me looking at back at it right now, because I haven't even looked at this since we had lost it. Um, we should have been trading. We should have been trading like this structure right here. Um, Actually, no, we shouldn't have been trading that because market made that similar to equal swing. All market did was it just retraced. So there was nothing we could really do about that. Because I'm not even looking at the market during this time, so there was nothing we could have really done about that. So, just take the loss and rinse and repeat. Remember, we're doing the same thing every single time. We're not going to win every trade. We're going to lose a lot of trades. We're going to win a lot of trades. It's just about doing the same thing every single time, rinsing and repeating, rinsing and repeating, rinsing and repeating, letting the probabilities play out. So me winning 40% of my trades, 50% of my trades, we're in significant profit every single, month. Even right now, even with this week, we won 2 trades, we lost 2 trades, right? I'm still $2,000 profit. Just like put an imagination, if I just rinse and repeat this exact same cycle each week, right? We already got done. We already got done with our first week. Right, we already got done with our first week. So right? So first week we're in $2,000 profit, right? Imagine we just do this every single week, right? Win two, lose two, win two, lose two, win two. We're not gonna trade, this many times. There's gonna be some weeks where we only trade 2 times. We're only, some weeks we trade 3 times. Some weeks we trade 1 time. Some weeks we trade 4 times. But just put in perspective of not having to win, not having to be perfect, and still being able to come out profit. Because if we made 2,000 this week, then we'll make 2,000 this week, this week, this week. That's an $8,000 profit. That turns your $10,000 account to $18,000 account. And then as you keep on growing, as you keep scaling, because once I get this account to 20,000, I'm gonna be risking more, right? Now I'm gonna be risking $2,000, make $4,000. So put in perspective like that. Let's say we're playing with a $20,000 account. This would be a $4,000 profit for this week. 4,000, 8,000, 12,000, $16,000 profit. You keep growing and growing and growing, right? Start thinking like that. Start thinking this market from a probability perspective, right? You know, because when you start thinking like that, when you lose trades, you're really not even gonna care, right? When I lose trades, it does nothing to me, right? Because I understand, okay, me doing the same thing every single time, I'm gonna win. I'm gonna win about half my trades, sometimes even more. You know, sometimes we're not only gonna win 50% of trades. Some trades we're gonna win 60%. Some weeks we're gonna win every single trade, right? But just putting in perspective of, you know, not having to win every single time, you're still going to come out profitable just by you, you know, being consistent and doing the same thing every single time, right? So we had, you know, we had lost that NZD USD trade. NZD USD and NZD JPY were kind of like similar trades. NZD JPY, I'm not going to go over that just for the sake of time. I don't want to make this video, you know, too long, but NZD JPY kind of had the same structure as NZD USD. When we had gotten to it, it had made that similar swing already, and like I said, we were expecting it to keep going up. And we were in really really good profit, and then it came all the way back down, and it hit our break even, right? So, you know, like I said, it was one of those trades where it's like we were expecting it to go higher and then just came back down. But yeah, GBPJPY, we can go over that. But you know, just for the sake of this video, I don't want to make this, you know, too long. But yeah, we had a lot of GBPJPY as well. Same thing, you know, expected it to go further and then just started keep, you know, going to the upside of whatnot. But yeah, so this was the first week of March. You know, like I said, we won two, we lost two. Um, 1, 2, we lost two. So pretty solid week. Market's about to open up in 3 minutes. So yeah, we get this next week going. We keep the profits rolling. We keep rinsing, repeating. We keep this account, you know, getting further. And yeah, let's just keep on moving. So appreciate you guys for tapping in. Make sure you like, subscribe, turn on my notifications so that way you're getting every single one of these videos. You're watching them. You know, you're getting as much knowledge as you need out of them so that way you can start implementing this to your own trades and you start, you know, learning how to do this for yourself. You start being more profitable, you start making more money, and everything else, you know, starts working hand in hand for you. So appreciate you guys for watching. I'll see you guys on the next video. Let's have a great week this week. Oops. Gonna be a lot more smoother.